We're turning our attention to gold here on Dukascopy TV, and I'm joined by Edel Tully from the London offices of UBS. Thanks for joining me, Edel. Risk sentiment is obviously so important to gold. Are you expecting a period of improved sentiment now that Greece is not at the front of everyone's minds?
I think generally, yes. Now that you, in a sense, don't have Greece front and centre consuming market attention, and some of the macro data in the US in particular is perhaps a little bit better than expected, then it's quite likely that you get a little bit of a bounce in risk appetite. And we're not necessarily looking for, in a sense, a broad-based jump in risk appetite, but certainly a bounce is quite likely to follow through.
We did see gold drop below the 1500 mark and it's bounced back since. But if we see a calm summer without any major shocks, can we expect gold to dip below that level on a regular basis?
It has been part of our central thesis for gold that it dipped down to 1475 was our target. That broadly has occurred. It didn't quite get down to those levels. When you look at gold right now, certainly one factor against gold in the summer months is a seasonal slowdown. By that I mean a slowdown from the physical markets. But what we have seen, certainly on those dips under 1500, that you have seen the physical community come in and buy gold. So there is, in a sense, a floor that's coming through into the market underneath 1500. However, it remains to be seen how many willing buyers from the investor side are around above 1500. So you could quite easily have a range-bound market over the coming weeks with physical demand supporting the market on the downside, but a lack of willing investor demand as we get above that 1500 mark until something changes in the macro environment.
Is there any chance we could see a repeat of January's scenario when we saw a steep drop in the price of gold? No,
that is not part of our base case. After that sharp drop in January, when sentiment towards gold turned decisively bearish, right now that sentiment is a lot more cautious. It's not bearish. And we said at the time back in, after that drop down to 1308, we said in February that most likely gold has already seen the lows for the year. So no, we're not expecting such a dramatic pullback. Although there are certainly investors in the market who would like gold to get back to those levels to become, in a sense, a much more attractive buying point.
So essentially, do you think the demand from central banks and developing countries for physical gold is strong enough to underpin prices?
Yes, that is certainly the case for the year to date. If you look at central bank data, the global central banks have bought somewhere close to 160 tons so far this year, led by Mexico. And we think that broad change, or that broad buying from the central banks will continue for the rest of this year. And central banks will look to buy as much gold this year as they did back in 1988. So yeah, expect central bank official sector support to remain in the system.
Okay, thank you again, Edel. From now on, we'll be keeping a close eye on precious metals here on Dukascopy TV, getting views from industry experts. But for now, goodbye.